And then I generally expect, both politically now, there's some green lights on it, and then also liquidity-wise, while there's potentially some bumps in the road, I don't really see like a major negative turn in liquidity, and therefore I generally expect that we probably will see higher highs in Bitcoin this year.
Lyn Alden begins by addressing a crucial point. Bitcoin's current market capitalization of roughly $2 trillion is still too small to make a substantial impact on global trade dynamics or to act as a significant reserve asset at a macroeconomic scale. While countries like El Salvador and Bhutan have started incorporating Bitcoin into their reserves, it is far from being a game changer like gold, which boasts a much larger market cap. For Bitcoin to be relevant in global trade or as a reserve asset at scale, it would need to grow significantly, potentially reaching a valuation comparable to gold, which is valued at over $12 trillion.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So in the intermediate term, I think that Bitcoin is still too small to be super relevant for the things we're discussing here at a 2 trillion market cap. It's probably still too small to really kind of enter these discussions. Now, any sort of decisions around strategic Bitcoin reserve are probably separately considered than trade for the most part. And so, while that could be certainly beneficial, it's certainly beneficial for Bitcoin price. And if I was advising any entity, whether it's a corporation, whether it's a family, whether it's a country, it'd be like, yeah, you probably should have some Bitcoin. If your goal is to maximize whatever thing that you're running, owning more Bitcoin is probably going to benefit you in the long run. So we'll see how that goes. If we look out long enough, then things like Bitcoin and having a Bitcoin reserve can actually affect some of these trade dynamics, because one of these solutions to having a structurally overvalued dollar and therefore a structural U.S. trade deficit is to instead have more international contracts and more international reserve stored in neutral reserve assets. There's basically two methods. One is you either have a more multipolar currency world. So you say, okay, so some reserves are in dollars, others are in euros, others are in Chinese yuan, and a couple other major ones. Or excess reserves and storage are kind of held in gold or Bitcoin. And now the problem is that the current, the upcoming Treasury Secretary has specifically said that they want to keep the dollar as the global reserve currency. They want that sanctionability. And I think that's where there's some competition. You say, well, we want to reduce the trade deficits, even though the trade deficits are what supply the world with dollars to be the world reserve currency. But we also want to keep the reserve currency because we want to be able to sanction anyone we want. And those are kind of competing dynamics. Now, maybe, decades ago during the Cold War, it was more advantageous to have the global reserve currency than to not. But now that the negatives have kind of accumulated and are front and center in politics, in some ways, ironically, the downsides of being the primary reserve currency might be outweighing some of the benefits. It depends who you are. If you're the U.S. government, you want reserve currency because you want to be able to sanction anyone. If you're Wall Street, you probably want the world reserve currency. But if you're industry, you're kind of the one that's on the wrong side of this whole apparatus. And one of the solutions there is basically say, well, instead of all these countries storing excess savings in dollars, treasuries, and U.S. stocks, save them in gold or Bitcoin or other types of global assets. But that's more of a conscious trade-off that I don't think this administration wants to make. The prior administration didn't want to make it. So I think it's probably a longer-term process, and Bitcoin has to get much bigger before it really enters those types of discussions as a kind of a reserve asset at scale. Right now we see El Salvador holding it. We see the Kingdom of Bhutan holding it. Potentially some Middle Eastern countries holding it. But in order for it to be like this, massive reserve holding among countries, I mean, at least has to get, half as big or as big as gold. So basically have to add another zero to market capitalization. And then it actually starts kind of being really relevant as, potential alternative as like a large scale reserve asset. The biggest things I would watch, one is global liquidity. Now, the potential risks to global liquidity are tariffs or anything that would spike the dollar. But that's offset by the fact that, we have a president that generally wants higher asset prices, that would generally not want a super strong dollar because he would perceive it as going against his trade policies, and you would potentially even label certain other countries as currency manipulators if they let their currency weaken too much relative to the dollar. So these with some bumps in the road, I expect decent liquidity this year, which probably is supportive of Bitcoin and gold. And then I also look at things like, kind of Bitcoin's own metrics. So when I look at, say, market value compared to on-chain cost basis, so market value versus realized value, I like to look at those types of ratios to see kind of how euphoric is the network. And so far, it looks nothing like prior major multi-year tops. It looks kind of middling in the road in terms of that metric. Similarly, when I look at, whenever there's a major bull run, there's like the hodl wave. So how, what percentage of coins haven't moved in over a year? And when you get a major bull run, that number starts to dip because you have a number of long-term holders that are up 5x or 10x, 20x in their position, and they start trimming into that strength, and new buyers are buying into that strength, and that eventually can exhaust new buyers. And the rotation we've seen is still smaller than prior major cycle tops. So when I look at in the Bitcoin space, it looks like that still has room to run. And then I generally expect, both politically now, there's some green lights on it, and then also liquidity wise, while there's potentially some bumps in the road, I don't really see like a major negative turn in liquidity, and therefore I generally expect that we probably will see higher highs in Bitcoin this year.
Alden notes that gold remains the preferred reserve asset for sovereign nations due to its stability and long-standing role in the financial system. For countries seeking to de-dollarize, gold is the more obvious choice for reserves that don't require liquidity or speed. As Bitcoin grows, it could begin to challenge gold more directly. However, Alden predicts that gold will retain its role as a hedge against major economic disruptions or cyber risks, given its physical, analog nature.
Well, I think gold's been benefiting the past few years because Bitcoin's too small. And, so when these countries want to, around the margins, de-dollarize at the sovereign level, gold is their obvious choice for savings that they don't need to be very fast, right? So they can hold them long term. The bigger Bitcoin gets, the more it starts to compete with gold potentially. Around the margins, I think it's already competed with gold a little bit, but actually I see more indications that it's competed with silver, platinum, and gold miners. Because if you're a hard money enthusiast and you have a bunch of options for things you could previously invest in, it'd be gold, silver, platinum, the miners. Generally, if you want low volatility, you go with gold. And if you're more bullish, you want that higher volatility, if you're more of a trader mentality, or just want that kind of, you're more bullish, you go with the higher vol things. But now with Bitcoin, it's higher volatility without the operational risks of being a gold miner or, things like that. So I think that actually some of those higher vol hard money assets have been more directly impacted by the existence and growth of Bitcoin and to some extent the broader crypto space. If you start to get bigger and bigger with Bitcoin, then potentially starts to challenge gold more directly. Probably not for quite a while. And then even in that scenario, kind of like how gold is always like seen as like the hedge against some sort of major economic issue, you could see gold as like the hedge against some sort of major cyber attack or something. People, there'll still be entities around the world that say we want to have some analog wealth stored rather than, put every single thing on this network. So that it certainly still could be seen as like a backup option and just a different type of backup. So I still think that compared to the global bond market, gold can still grow into that, even as Bitcoin is on its flank, kind of growing into gold to some extent. Decent liquidity conditions and ongoing fiscal dominance in the US, which is leading a lot of things to run hot, ranging from nominal GDP to asset prices. And a couple of the key things I'm watching for 2025 is basically anything that would change the course of that or give us some wiggles along that path. And so one of the things I'm watching first and foremost is the debt ceiling issue. Not because I expect much out of it in the long run in terms of all the defaults and stuff that can happen, but rather because when the debt ceiling's being contested, the Treasury has to do extraordinary measures, which they started this week, and that basically means that they have to drain cash from their account back into the system in order to keep paying their bills without issuing that new debt. So the longer that goes on, that's a liquidity factor, which can then translate into asset prices and other things like that, financial conditions broadly. And then also the one of the biggest things to watch is tariffs. That's potentially an all year thing to watch, but especially in the first few weeks and months here to see any sort of announcements around that. So I get a lot of questions around what's the Fed going to do. We obviously have an upcoming Fed meeting, but in this era of fiscal dominance, I pay a lot more attention to some of these other factors, even though, of course, Fed decisions still matter. But at the end of the day, fiscal matters a lot more.
Lyn concludes by discussing the broader context of fiscal dominance in the U.S. economy. With nominal GDP and asset prices running hot, fiscal policies are driving much of the current economic environment. While Federal Reserve decisions still matter, Alden argues that fiscal factors now have a more significant influence on liquidity and market conditions. This fiscal dominance creates a supportive environment for Bitcoin and other hard assets which benefit from inflationary pressures and liquidity-driven growth.